What's driving the rise in beef prices?
Well, there was a big, pork flu that destroyed a higher number of pigs in China about a year and a half, 2 years ago, that the entire North America supply. That's not U.S. supply. That's North America supply. And so, as they kind of struggle to replace that supply, it's going to have to come from somewhere. And ground beef costs, especially imported beef, New Zealand, Australia, et cetera, we're seeing that jump quite dramatically already, and that could potentially have a bigger impact down the road.
So a pork shortage leads to replacement with beef, leads to higher demand for beef, leads to higher prices for beef. What restaurant brands are most vulnerable to this, and what is the increment or the pressure that it puts on their margins?
Well, if you think about names like Wendy's, Jack in the Box, obviously all the burger players, including not just the QSR burger guys, but names like Shake Shack, for example. So those are the ones that are in the bullseye. That could have anywhere from 100 to 300 basis points of impact in terms of margins, just because you've got 20% to 30% of their cost of goods sold in terms of food costs are ground beef.
Right, 1 to 3% change in margins on that, which is one reason why you are favorably inclined to Wingstop, and then we'll get to a second choice. Why Wingstop, and what are they doing right vis-a-vis Buffalo Wild Wings and others who are in this area?
Well, they're benefiting from the chicken category growth, and that category has grown more than 3 times the entire restaurant category. They've got the right things in terms of the digital investments they're making. They're up from 25% to 36% in terms of the digital sales mix just in 1 year. That's set to continue. I think they can reach where pizza guys are in terms of 60% digital, mobile and web orders and delivery. So that's going to drive outsized comps, and you've got input costs that are actually favorable for them as opposed to risk for other names.
We got about 50 seconds left. You also, like Dunkin', is part of your hypothesis there that bringing in plant-based sausage is going to help them, or is that a marginal impact?
Well, it might have a marginal benefit in the near term. I mean, the bigger thesis is that they're doing a lot of the right things to sustain a more consistent comp going forward than they have historically. And it's not a Herculean comp that we expect, something like in that 1.5% to 2% range. But we're also seeing a pretty decent increase in international comps. And that's a story that hasn't been talked about very much for Dunkin' historically. We think that's going to be a growing focus going forward. It should help both earnings and valuation.
All right.